Good morning. Good morning. This is Valerie Leonard. I am the founder of Nonprofit Utopia. I want to apologize. I'm having a little difficulty with my camera, so you can't see my face. All you see is an icon. I thought it was really, really important, given the current climate, to share information about the coronavirus pandemic as I get it. And today we're going to focus on how to actually access that money. In fact, all this month of April, we're going to be focusing on disaster preparedness. Last month, we focused on board development, but given the pandemic, we did actually start celebrating disaster preparedness in March. And we have already one Crowdcast that you can download off of the Crowdcast site. And today we're going to be talking about cash flows, projecting cash flows, and actually showing you how to access funds. And then next week, we'll be back and we will talk about how you can actually create a new vision for your organization given the new normal. It doesn't mean you have to totally reinvent yourself, but what are some of the things you can do, realizing that we are in a very interesting time and things may never be the same again. So this is a really good time for us to start positioning ourselves and our organizations for the, I think, somewhat permanent changes. We'll be doing things a little bit differently, I believe, after this is over with. And then the following week, we will have a couple folks on from the South Side of Chicago who are going to be sharing with us how they actually are dealing with this situation from a community perspective. So it's really good to see the community grassroots coming together and responding to the COVID-19 crisis. And then following that, we're going to talk about how you can combine technology as well as neighborhood networks to respond to the COVID-19 virus. And Belinda Guyton, I see that you're on. Thank you so much. Welcome, welcome, welcome. And before we really get started, I'm going to encourage the folks who are watching on Facebook Live, please don't leave us because you don't see my face. You will be seeing a PowerPoint presentation very shortly. And the same for those who are watching from YouTube Live. Please don't leave us. We've got a lot of really, really good information to share, and I promise you this will be worth your while. Alrighty, so just give me a moment. I'm going to bring up the PowerPoint presentation. And then I'm going to share my screen for you in just a moment. Alrighty, so I've got the screen up, so now you don't have to see that blurry picture. And just bear with me just a little bit. I want to try to maximize this as best I can. Well, all right, so I'm not going to worry about that. So at this point, we're going to talk about how you can actually measure how much cash that you have. And then the second half, we're going to focus on accessing some of the government cash. So today's theme is how long before we run out of cash. And before we do that, I want to talk to you a little bit about Nonprofit Utopia. We're the ideal community for emerging nonprofit leaders, and we have created a safe space in which our members can innovate, speak candidly about the issues and concerns that they share on a daily basis, and then share ideas and resources. And our mission is to develop the next generation of ethical nonprofit leaders. We provide ongoing professional development and networking opportunities in which nonprofit professionals who are more experienced can share their expertise with the next generation of ethical leaders. And at the same time, we learn a whole lot from our younger members. And the overarching goal of the community is to give our members the tools that they need to develop strong organizations that will make a lasting impact. And we do that through the online community, we do that through consulting, and we also do that through coaching. And our vision is to strengthen the global nonprofit sector by providing training and development opportunities for 50,000 emerging nonprofit leaders throughout the world by 2033. And if you want to find out more about us, you can go to nonprofitutopia.com. And if you are interested in joining our club, so to speak, you can go to nonprofitutopia.mn.co. And I don't mean to call it a club, but it is a private membership group. And to give you a little bit about myself, I am a consultant. I specialize in community and organizational development. And I work with emerging nonprofits for the most part, some institutions, but for the most part, emerging nonprofits to help them develop the capacity to impact their clients and communities in a very positive way. And I'm also the founder of Nonprofit Utopia. As I said before, we're the ideal community for emerging leaders. And I also host the Nonprofit Utopia Internet Radio Show or podcast. And that is on Mondays on blogtalkradio.com. That's a forum where nonprofit stakeholders, again, can share their lessons learned in the community. And I also teach online courses in operations management for UIC Certificate in Nonprofit Management Program. And I teach entrepreneurship at Roosevelt University's Heller College of Business. So there's a lot of opportunity for cross-pollination for our members to learn more about what's going on with social ventures as well as nonprofit. I have a Master of Management degree in Finance and Marketing from Kellogg and a BA in Economics from Spelman College. And over the years, I have worked in nonprofits, either running a nonprofit or consulting, and I've helped over 750 people raise over $100 million through technical assistance and grant writing. So getting back to why we're here, there is absolutely no question that the COVID-19 pandemic is causing a ripple effect in the world economy. While we can't control what's going on around us, we can assess our situation and we can preserve our limited resources to make sure that we can weather the storm, right? And position ourselves for sustainability. And sustainability today probably means something very different than it did, just in January, before we really understood what was going on with the COVID-19. So we're going to be mostly focused on two things, and that's basically how to manage your cash, and then two, how to apply your cash. So we're going to help you determine your current cash position. We're going to help you to forecast your monthly cash flow based on what you know now and making certain assumptions and projecting it out into the future. And then we will also help you get a grasp for how long your cash could last if you don't do anything, right? So we're going to show you a little bit of modeling. And then we're going to help you to determine how much money you need to get through the immediate crisis and plan for the future. So for our purposes today, we're going to be looking at how you can project your cash needs from now until the end of the year in December 2020. And that may or may not be your fiscal year end, but we're going to show you how to do it from now until December. And then most importantly for you, we're going to show you how to apply for SBA COVID-19 funds. All right, so we're going to just cut to the chase now. This is a sample budget, and it may be somewhat small. You may not be able to see it from your device or from your laptop or even your tabletop computer. We do have links, so if you're joining us here in Crowdcast, we do have links to this spreadsheet. And this is a sample budget. We're showing you, this is a base case scenario where an organization has a budget of about $180,000. So they're anticipating $180,000 coming in, and they're anticipating spending $180,000. So this is a break-even budget, and they're assuming that they're going to get $100,000 from foundations, $20,000 from their annual giving campaign, and $10,000 from their annual dinner, $25,000 in fees from providing technical assistance to other nonprofits, and then another $25,000 in CDBG funding for housing counseling. Now, how are they going to spend that money? They're going to, and I'm not going to read all of these line items. You should be able to access this in your folder. And just in the interest of time, I'm not going to read every line item, but they've got about $180,000 in expenses, and their largest expense is salary and benefits, followed by rent. So the way this budget is arranged, you start off with the personnel, and then you have office costs, and then travel costs, and then those other fees that you might have contracts for. So what does this look like on a monthly basis? So it looks really, really good when we look at our budgets. We look at how much money we anticipate coming in, and we look at how much we anticipate going out for the entire year. We've got a balanced budget. But what this doesn't show is how much money is coming in on a monthly basis, how much money is going out on a monthly basis. And as you can see, from month to month, that changes. In some months, they have surpluses, and in other months, they have deficits. And that's just looking at the revenue, total revenue minus total expenses. So for this first case, this is a base case scenario. They are projecting that they will have 52,000 of the 180,000 to come in the month of January, and that'll come from a $50,000 foundation grant and about $2,083 from training fees. And then they have divided the expenses on a monthly basis. So they expect to have about $16,000, $16,675 in total expenses. And if you subtract the expenses from the revenues, you come up with $35,000 in surplus, right? So you do that for every month. And then the first month that we start to see an operating deficit, that's the month of March. So in March, they anticipate $7,083 coming in, and they expect to spend $15,175. So they have an operating deficit of $8,092. Now, this is not their cash balance, but that is their operating deficit. So you do that for the entire month. But over time, that that catches up and it evens out, so to speak. So they still end up, with a balance of zero. But however, if they don't do something in the midterm, from month to month, they could find themselves in a situation where they may not have enough money to get to the next month. So I'm going to show you a more realistic way of looking at this. So we're not necessarily looking at just the money that comes in and just the money that goes out on a month-to-month basis. We're also looking at how much money they have on hand. So in this case, we're taking the same budget, right? And we're dividing the revenues and expenses, or spreading them over the year, right? And we have, in this case, we're not calling this area here total revenue. The reason we're not calling this total revenue is because it takes into account the revenues and the cash at start. So we added a new line here, which gives you how much money they start the month off with, right? Which gives you a much more accurate picture than just looking at what comes in, in terms of revenue and what is spent in terms of expenses. All right, so we're going to assume that there was no money, no cash balance at the start of January. And they actually got $52,000 in January. And then they actually spent $16,675,000. And if you subtract those two, the difference between those two is $35,408. So you take this balance, this ending balance in January of $35,408, that becomes the beginning balance in February. This is not a revenue, but this is money that was carried over from the last month. So this is the cash at start. And then they're projecting $2,083 to come in from training fees, and they're expecting that one-time payment of CDBG funds. And I should say that realistically, CDBG funds are not given in one lump sum. They're typically paid out on a reimbursement basis, but I'm just doing this for illustration purposes. So they have indicated their monthly expenses, and they came out to be $15,675,000 for the month of February. And at this point, you take out the total cash flow, which is the beginning cash, the cash at start, plus any money that came in for revenues, and that becomes your total cash flow in. And then you subtract what went out, and that gives you what's left. $46,816,000. So this continues from month to month, and they end with a cumulative balance of zero. And this is fine. They broke even, right? So this is what they were projecting before, right? This is before coronavirus, right? So now they're finding themselves in a situation where they need to make adjustments. And I'm sure you're finding yourselves in a position where you also have to make adjustments. And for this purpose, we're going to make the adjustments. We're going to assume that the foundation grants stay the same. We're going to assume that they only got $1,500 in contributions, and those won't come until later on in the year because everybody else is trying to recoup too. And they had to cancel their event. So where they were counting on $10,000 for fundraising, they now have zero. And then they were counting on $25,000 coming in for training fees. Things started off fine in January. They were going according to plan in February. But then we found out, we have to actually stay at home and work. and this whole pandemic is impacting our whole economy. So they had to cancel the event, and not only did they cancel the event, they had to cancel some of their training because heretofore a lot of their training was in person. So they're taking a couple months to regroup, and they'll be having their events online, and they're not expecting to generate nearly as much income. So whereas they thought they were getting 25,000, they're only getting 5,000, and they're spreading it evenly from May through the end of the year. Okay. And then actually, in this case, they have actually come out ahead of what they projected. All right. So then that adds up to 131,500 once we add the 25,000 grant. Okay, so you're assuming again that the expenses stay the same, and we do that the first go round just to get a sense for what would happen. How long can we stay in operation if we don't do anything? And we see here that we have a deficit of 15,000, and this is twice what it was, right, before. So you see that we're running even more deficits, more consistent deficits than we did before coronavirus, right? So what does that look like in terms of our cash position? So what we just saw was, the money coming in terms of revenue, the money going out in terms of expenses. This does not take into account money that was carried over from the previous months that's still in the bank. Whereas this, again, takes into account money that is left over from the prior month. So if we continue that same scenario, we see that we can operate as is without making any adjustments to our expenses, without renegotiating any contracts, without laying anybody off, without cutting services off. We can last until June. So June is the month that we start to see a deficit. So really, we can last until May. So we got 1 month, if we're starting from today. So in 1 month, we're going to be out of cash. We're going to need to get a loan. And you can see here, whereas we were projecting to break even before with our base case, we have a deficit of $41,334. So if we want to maintain services at the level that we said we would in our planning and in our budget, then we need to raise money, right? We need to raise $41,334 at a minimum just to break even. You may need to raise even more given some of the extra expenses that you may incur for doing business a little bit differently as a result of COVID-19. So you need to plan accordingly, but at a minimum, you should be asking for a loan of $41,334 if this is, a similar situation for you. And then this exercise, I'm not going to go into all of those numbers. I'm not going to show you that case, but that shows you, what happens if you don't make any adjustments, if you don't cut back. But then when you do this exercise, you get a chance to prioritize. You look at all of these line items and you look at what you can do without, what costs you can delay. You look at what you can do of with less. All right. So you play around with the numbers to see how you can best, worst case scenario, how can you best live within this new reality of 131,500. So worst case scenario, you can't get a loan and you have to cut $41,334 in expenses. How are you going to do it? So looking at this gives you some ideas as to where you can cut and how that's going to impact you. So that's very important when you start asking for money, whether it's a loan, whether it's a grant, or even just for your own planning purposes. You need to know how much money you have on hand at all times and how much you can expect. Alrighty, so before we go on to the next section, I need to know if you have any questions or comments about what I have presented. Let me know if it was clear. Let me know if it wasn't clear. Let me know if there's something I need to repeat. And again, you have a link to the box that will have this file. There's a spreadsheet with these examples that you can see for yourself, and there's some notes in there that tells you how these calculations were generated. Okay, so I don't see any questions, and I'm asking the folks who are watching on Facebook Live, if you have any questions, if you have any comments, please leave them in the comments section. You can join us here in Crowdcast by going to crowdcast.io/e/long-before-I-run. So if you enter that into your browser, you can enter this Crowdcast with us, and you can have access to all the downloads that we're referencing. You can also have links to our resources. I have posted a number of resources. There's a link to the SBA COVID-19 website. There's a link to the Paycheck Protection Program offered by the Treasury. There's a link to the Paycheck Protection Program sample application, so you'll know what that looks like before you even fill it out. There is a link to the home loan application, and that's for people, that's for individuals who live in disaster communities. And if you live in the state of Illinois, you do qualify for living in a disaster area. Then we have a link to the emergency coronavirus loan program. There's an article that was printed by the Philadelphia Inquirer. And then finally, there is a link to the box folder. So there's a number of resources that we have here that you can tap into, and hopefully you'll be in a really, really good position to go apply for funds just as soon as we get off this Crowdcast. So right now, I'm just going to take you through some screenshots of the SBA website. They have disaster loan applications with a number of links that you can go to, and I'm just going to share with you, various sections of that website. So one of the first programs they have is the Paycheck Protection Program, or PPP, and they're giving information for borrowers. And they indicate that the Paycheck Protection Program, or PPP, authorizes up to $349 billion, that's billion with the B, in forgivable loans to small businesses to pay their employees during the COVID-19 crisis. All loan terms will be the same for everyone. The loan amounts will be forgiven as long as, one, the loan proceeds are used to cover payroll costs and most mortgage interest, rent, and utility costs over the 8-week period after the loan is made. So basically, you need to indicate, or you need to be sure or assure them that you're going to not fire anybody for 2 weeks, and you're going to use this money for mortgage and interest and or rent and utility. So basically general operating costs. And then as a condition, you have to make sure that you don't hire anybody extra and you don't lay anybody off. So your employee and compensation levels have to be maintained. Your payroll costs are going to be capped at $100,000 on an annualized basis for each employee. So what they'll do is they will look at the salary expenses for the first 3 months, and maybe the first 2 months, whatever financials you can share with them. But ideally, I would, if I were you, give them the first 3 months of their payroll costs and then annualize them. So if you spent 25% of their cost, assuming somebody makes $100,000, and through March, you will have expended $25,000 on them, assuming that they start in January. Okay, so they're going to annualize that $25,000 cost. So to get to that $100,000. So due to likely high subscription, it's anticipated that not more than 25% of the forgiven amount will be for non-payroll costs, and loan payments will be deferred for 6 months. And I have, a link to more detail that should explain some of these terms. Okay, so the next program they have is the Economic Injury Disaster Loans and Loan Advance. So they don't have a mechanism for giving out grants at this time for this program. So what they're doing is creating a forgivable loan, right? But in order to get the forgivable loan, you have to apply for the loan. And we're going to walk you through that process in just a moment. And once you apply, there is an option for you to indicate whether or not you're interested in receiving that $10,000 advance. Okay. And then after that, there is a provision for home loans or sole proprietor loans. So if you're self-employed or if you have a mortgage that is in straits, because of the COVID-19 situation, you can actually apply for a loan. Okay, but we're going to focus just for the most part on that $10,000 grant. So if you go to the disaster loan assistance page and actually clicking onto the loan, so I'm sharing with you screenshots of what it was like to actually go through this process. All right, so this first page gives you the requirements, and then you need to choose one of the following, whether or not you are a business with no more than 500 employees. You need to indicate whether you are an individual who operates under a sole proprietorship with or without employees, or as an independent contractor, aka self-employed, or are you an applicant that is a cooperative with no more than 500 employees? Or are you an employee stock ownership plan, or ESOP? So do you have a company that is owned by the employees and it has to fit within the guidelines of 15 U.S. Code 632. All right. So then if you're not one of those, are you a tribal small business concern as described, as outlined by the law? And are you, not and, but or, are you a business including agricultural cooperative, agricultural enterprise, nursery, producer cooperative that is small under the SBA size standards? And they give you a link to describe what that is. Or are you a business with more than 500 employees? Or are you a private nonprofit organization? So this is what most of us here are interested in now. Are you a private nonprofit organization that is a non-governmental agency or entity currently that has an effective ruling letter under the IRS granting exemption? So basically, are you a nonprofit in good standing and you are tax exempt? So you have to be one of those. And then you have to check off all of those, right, that apply, and hopefully they all apply. Okay, the first thing is the applicant is not engaged in any illegal activity. Then you have to indicate that there's no principal of the applicant with a 50% or greater ownership interest is more than 60 days delinquent on child support. So if you're a partner in the business, if you're a part owner and one of the owners is more than 50%, I'm sorry, has more than 50% ownership and they're more than 2 months delinquent in child support, then the company does not qualify. You have to check off the applicant is not an agricultural enterprise other than an agricultural enterprise, agricultural cooperative, or nursery. And you have to certify that the applicant does not present the performance of a prurient sexual nature. So basically, your business is not focused on pornography or anything else that would be considered obscene. And then you want to indicate that the applicant is not in the business of lobbying, and the applicant cannot be a state or local government, right? So all of those have to apply in order for you to be eligible. And then you go to the next field, and then here you just give them, basic information about your business, things like your name and, social security number or tax ID number if you're an organization. And then you indicate whether or not you're a nonprofit. And then, there are a number of questions, is the applicant a franchise? And for nonprofits, in most cases, I would imagine the answer is no. And then after that, you list the gross revenues for the past 12 months. And then you indicate your cost of goods sold, any residential property income that you have lost because of the disaster. So whatever money you have lost as a result of COVID 2010. And then if you're a nonprofit, the cost of operations for the past 12 months prior to the disaster. And they're assuming for their purposes that the disaster started January 31st. So you would need to give the operation costs for the past year, for last year. And then you want to give the combined annual expenses prior to the date of the disaster for all secular services provided by a faith-based entity. So if you're a faith-based organization, they're only focusing on those secular activities. You don't need to include the expenses for your faith-based activities, such as proselytizing and worship. And then you want to list the secular social services that the faith-based entity provides. So if you're a church that doesn't have a separate 501c3, if you're engaged in any secular activities, you will put that here. And if you're a faith-based organization, you would list those activities that are secular. Again, those activities that don't include your religious activities. And then you want to indicate compensation from other sources received as a result of the disaster. So if you have any state funds or any foundation funds, you want to indicate those. And then you want to provide a brief description of other compensation sources. And I would not put anything down unless I'm absolutely sure that I either have it in hand or there's a reasonable certainty that I'm going to get it. You don't want to count your chickens before they hatch. And then you want to provide a brief, then you want to give your primary business address, city, state. So again, that's just basic information for the business itself. And then you want to, in addition to name, address, phone number, and all that other stuff, you want to indicate what the business activity is, and then, provide some detail. So the first thing is, just an overall view of what exactly is the business, and then talk about what it does. And then give the number of employees that you had as of January 31st. And then next, so this is the third phase, we want to give information as it relates to the owner. So that first section, we focused on disclosures. The second section, we focused on business information. Now we're going to focus on the business owners. And again, you're just basically giving them your name, address, and social security number or tax identification number. And actually, as an individual, you have a social security number. You want to indicate where you're born and whether or not you're a citizen. And then you're going to provide additional information. So in the past year, has the business or listed owner been convicted of a criminal offense? Yes or no? And, or have they been, were they in a criminal offense committed during and in connection with a riot, civil disorder, or other declared disaster, or even engaged in the production or distribution of any product or service that has been determined to be obscene by a court of competent jurisdiction. So they would want to know, not only have you been convicted, but have you been convicted of an offense related to rioting or protesting? Is the applicant or any listed owner currently suspended or debarred from contracting with the federal government or receiving federal grants or loans? And the answer is yes or no. Are you presently subject to an indictment, criminal information, arraignment, or other means by which formal criminal charges are brought in any jurisdiction? B, have you been arrested in the past 6 months for any criminal offense? For any criminal offense other than a minor vehicle violation, have you ever been convicted, pled guilty, pled nolo condere, or I guess no contest, been placed on pretrial diversion, or been placed on any form of parole or probation, including probation before judgment? All right, and then after that, this section here is to talk about whoever has helped you. So if anyone assisted you in completing this application, whether you pay a fee for this service or not, that person must enter their information below. So if anyone is helping you to complete the application, and I do not count this webinar as helping you to complete. I'm just sharing information. So don't put my name here. But if at any point you do get assistance from someone and they're helping you, this is where you put their contact information and how much they're charging you. And then at the very end, it says, one, I would like to be considered for an advance of $10,000, up to $10,000. So you have to go through this whole loan application process before they ask you whether or not you want to be considered for an advance. And just so you know, you can get this advance if they approve it, and you can get it whether or not they approve the full loan, right? Which is, this is how they're working around the fact that the SBA does not have a specific grant program for COVID-19. All right. So this is where you send the funds. They're going to send it electronically, and then you will have to, agree to, a certain set of criteria here. And then after that, you will press send. All right. So the process itself is very, very simple. It only takes a few minutes. I think is very, very well worth your while. If you can get $10,000 out of it, assuming that your small business or your nonprofit organization qualifies. If you get it, you don't have to pay it back. This is a forgivable loan. But if you need a larger loan, you will need to go through the regular application process. So someone will, when you apply for this, you'll be contacted. One, I guess, to let you know whether or not you got it. But two, you will have to complete other forms that will need to be processed. And at that point, if you need more money, you can talk about how much you need. All right. So without further ado, are there any questions, any comments? Let me know if this has been helpful, if it's not been helpful, if it's not been clear. All right. So if you have any questions regarding this webinar, you can email me at ValerieFLeonard@nonprofitutopia.com. If you are a member of the Nonprofit Utopia community, you are eligible for technical assistance. That comes with your membership, and you can post questions that you might have in the course forum. And again, we invite you, if you're not a member of Nonprofit Utopia, to join us at nonprofitutopia.mn.co and follow us at Nonprofit Utopia. Follow on Twitter. And you can also find us on, you can find Nonprofit Utopia on Facebook. All right, so before I sign off, I'm going to ask you one more time, are there any questions? Are there any comments? All righty. I'm going to, all right. So, all right, no questions or comments. So I guess we can sign off now. And again, I thank you so much for your time. I hope that you find this worth your time. You should be able immediately to go to the SBA website. You'll know what to expect. You know how to apply for funds, and I pray success for you and hope that you are one of the people who are fortunate enough to get that $10,000 grant. And if you need to apply for other loan funds, I hope and pray that you are successful. And most importantly, I pray that you're safe. I pray that your business is safe. Pray that your family is safe. All right. So without further ado, I'm going to sign off now. All right. Take care and thank you.